even though we'll have something for the next 2 noons, if you will. Tomorrow we're going to talk a little bit more about side hustle, on Wednesday we're going to preview what we're doing in some of our syndications. So you're going to see one of our new syndications kicking around. We just like to share that. It's mostly with our syndications right now are mostly with our mastermind members. It's something that we do as a group so that folks get some experience and they're able to, in 6 months or so, just go ahead and start their own mastermind, start their own syndication. So, got lots of stuff. All right. I'm going to pay a few bills here, so be patient with us. You guys have any questions that you're thinking about? Let's get them up there going right now. This is the market update for May 2020. We do these on Mondays and Thursdays. Thank you very much for joining us. Hey, as usual, we will be talking about loans. We'll be talking about syndications. We'll be talking about crowdfunding. We'll be talking about limited liability partnerships so that we can take vacations all around the country. And we'll be talking about the Founders Club as well, which is a loan. So we're talking about a lot of that stuff, but it's really for demonstration purposes or awareness purposes only. If you're going to be solicited, it's going to come through a gentleman named Brian Burr. He works with us, and you're going to get, correspondence going back. You'll get all the addendums and all the PPMs in front of you so you can make a decision. Hey, guys, we're on the radio Monday through Friday. We did some shows on Friday morning, so tonight will be a new one. It should be pretty good from 9 to 11. Make sure you check that out. 1070 The Answer also will do live streams, so you can pick us up there if you're in a different time zone or outside of Houston, as well as our stuff is up on our podcast, our YouTube channel, and on Facebook Live. And I actually think the stuff is going up there. I'm seeing progress. The best way to stay updated with us is to join our Facebook group, Mr. Texas Real Estate, with Jason Bible and Robert Orfino. Again, paying some bills here. We got Jet Lending as a sponsor. They're kind of interwoven. Last 60 days, Jason, we're all over the place. We are tying our shoelaces together with these guys. So we're doing a lot of different things with them. We have a lot of synergies. So we want you to check them out if you need hard money. Give Rob Trigg a call over there. Reach out 281-872-7800. Patent Title. Big event coming up in June. We call the refi event. So Patent Title is absolutely going to be a part of that. We'll do that in one afternoon, and we'll make sure we record it for you guys. But I'm sure Jason's going to cover the refi rates. But I saw something as low as 2.38. And obviously that might be a teaser rate, but I did see it out there. So if you and I ran my calculations on the refis, guys, it looks like I'll be able to save almost $1,700 a month with just my Fannie loan. So when you're doing a refi, you can make sure you go through Patent Title. MRTXRE at patenttitle.com. Quest, got about another week left before the special runs out, so make sure you go over there and get signed up for your 2019-2020 Roth IRA. You're going to do solo 401ks. They're also the company to work with. In Capital Concepts, Sean will soon be our office mate. These guys have picked out an office in our real estate investment center. So guys want to check that out. MRTXRE at 4smartmoney.com. These guys are great. They'll get you hard money. They'll get you long-term non-QM. They'll get you Fannie Mae. They'll do a lot when it comes to the loan business. So they're very broad in what they get. We want to definitely have a conversation. They'll work with you. Houston Plans and Permits, that's Hugo. Make sure you're giving these guys a shout if you're going to add on or if you're going to do ground up, which we are working on. So we're very excited about getting all this moving. And if you're going to get that itch to do the add-on or ground up, make sure you give Hugo over there a phone call, 281-372-1555. This is next Thursday. So not this Thursday, we do our side hustle webinar. I think on Sundays, we're just going to start breaking it down into the companies. I don't know about you, Jason, but I was very bored last night. I felt like there should have been a webinar. So on Sunday nights, we'll start dialing into some of the businesses that we're doing. Thursday night is a very general, I have a side hustle, I'm trying to figure some things out, Q&A. We got more stuff coming, guys. We got our 5-hack class. What we used to tell folks was, hey, I want to get into real estate investing. I'm brand new. What do I do? We would tell, hey, go out there and study 90 days, do 100 hours of this, listen to podcasts, figure this out. Generally start, make some very small networking moves, figure out what room you like, who you're really sort of bonding and building rapport with, and, give yourself 6 months. We don't believe that's an option during this crisis. We believe you need to get up to speed as quickly as possible, especially for those that are shifting over, making a pivot in their careers, or just trying to bring in more income into their household. So we have 5 hack classes. This is our quick hacks to real estate, the real estate world. We already did 2. I've recorded them. I'm going to record another one. I'll probably do landlord workshop on. Actually, I have that one recorded. So we just have disc to do, and we'll do disc after we do the Airbnb, and then it's going to be real estate foundation. So it's disc, loans, landlords, real estate foundation, and project management. So we're going to bring you those 5 classes, and instead of trying to time it, are you available on Saturday? We'll just have all the videos online. You can just buy the package. The 45 Club, happening soon. Hurry up, outside forces. Maybe start hinting at this a little bit more on Thursday when you sign up. Pretty big announcement. We're excited about this. Jason's going to have to swallow a little bit. And then we're going to start doing some low-cost group coaching. And I'll tell you what mostly this is going to be about. It's going to be about acquisitions. So if you're getting into the business, trying to figure out how you get properties, you want to do some off-market marketing yourself, Jason's going to run 2 1-hour group coaching classes, group coaching calls each month. It's going to be $100 to sign up. It's $1,000 for the year, and it's $550 for 6 months. And so we want to get you signed, or you can just do $100 a month after month. So we want to get you signed up for that. It will be about target marketing. We target our marketing. We're not the shotgun approach. I got a We Buy Ugly Houses, a home investors postcard in the mail on Saturday, and I was like, why would you send this to me? I have not owned my house for more than 2 years. There's barely any equity in it, maybe less than 10%. So why am I being targeted? And the answer is, I'm not being targeted. Everyone's getting these. And I know the big complaint about being a wholesaler and being a wholesaler for a national company like those guys is the amount of marketing you have to put in, marketing dollars. And I just thought, boy, what a waste of 30 cents this was. 40 cents.
Rob, they sent you a postcard?
Me a postcard for my house here in Houston.
That's pretty stupid.
It's just because they're silly with their money, right?
Yeah.
And so we're just the opposite. We are snipers. We're not going out there with a flamethrower. It's very snipery. It's very targeted, very, very specific, because we like to backfill. And we'll go into this a little bit more. Maybe we'll do this on Wednesday night or so. Tuesday, maybe Wednesday night. What we typically do is this, guys. We bought 2 houses on Laredo Avenue in Corpus Christi. And in this little 1, 2, 3, 4 block area, we like to buy as many houses. So now we target that area, not just by address and owner. We go a little bit deeper by actually finding the owners, where they live, getting more data, really digging deep, and then do a very targeted marketing campaign to them. So that we can backfill our area, which allows us to raise the value of our own properties by buying more property there. That should make sense to you.
Yeah, let's do it Wednesday, Rob. That's a good night.
Wednesday night, 9 o'clock?
Yep, that'll work.
All right. I'll get Taylor to write that up. So that's pretty exciting for us. Part of it is going to be banner season. We're going to highly recommend you. It's going to be, roughly, we're going to say it's $150 a month, $100 for the coaching, $50 to get access to unlimited postcards, which makes a lot of sense. So we're going to be pushing that on Wednesday night. So look out for that. This is the Texas Real Estate Investment Center. I did a video from there this morning. We are about halfway done with the demo. So we're very excited. We're going to get the roof and the air conditioning taken care of this week. So technically we'll be about 20% of the way through. And we are making great progress. We want to open this up to our tenants by July and open it to the public by August 3rd. We're still on track. And it's all about, for us, building a better community, really getting people having a place that is a sort of epicenter for real estate investors and real estate professionals inside the Houston area, not just a Keller office, not just a Remax office or this office or that office, actually welcoming everyone into our building. Everyone. Share group and share and learn as a group and have events, bring in the general public. So we're really trying to build that community, and we'd like you to be a part of it. We have some spaces available. I actually just created 2 more singles, so now we're at 22 singles, 5 doubles, 5 suites, and 2 anchors. Pretty close to, now that we added some, we're pretty close to halfway full. So interested in some office space in there, let us know. We also have about 6,000 square feet to suit. It's a 100-person learning center. It's a big classroom. We got a cafe. That's all demoed. Jason, it looks huge now when you're in there.
No kidding.
Yeah, so with the tables in the bar, it's going to look hot. We have a call center. And we're going to have about 40, now we may be able to turn that out to about 45 workstations, which means we'll be bringing in, about 100 people who want to join and work in a co-op space. There's conference rooms that you can make sure that you can reserve. It's a media broadcast studio. And again, we're looking for founders on the investment center. So if you have any questions about the crowdfund that we're doing, or if you have a relationship with us and you're interested in talking to Brian about the syndications, there's the information. You can text 281-401-9008. Just ask for Brian, or you can email Brian. We put out a notice inside the group for the in-loop syndication, Jason, on Friday, and I believe we got about 10 people back who are interested in getting involved in that syndication. So it's a very exciting time for us. If you guys want to reach out to Brian, it'd be a great thing to do. So, all right, Jason, what do you have?
Well, let's get started here. Interesting things on, let's see, where's screen share? Here we go. All right. Interesting stuff out there in internet land. Let me just skip around here a little bit. I want to talk a little bit about this. We're going to do a little virus talk, and then we'll get into what's going on in real estate. If you guys have been watching, there's some interesting news coming out, and pretty typical. I think most people, including the media, are missing the big point here. All right, so there's lots of talk here. States are opening back up. Now, I will tell you this. I don't care what you read. Well, maybe I should put it this way. My lay of the land here, where my anecdotal evidence is telling me the country's not even close to being opened up. I was yesterday. I was going from breakfast place that literally had 3 people in it. That's in the old section of the Heights. If you guys know where the Heights Theater is, I was over at Harold's yesterday, and there were like 4 other folks there. I mean, there's nobody there. That place should have been packed. The weather was ridiculously gorgeous. Then went to another bar after that was about 50% full. The last time I'd been at that bar on a Sunday afternoon, it was packed. It was crazy. You couldn't even find a parking spot. There were people everywhere. But in the post-COVID world, it was maybe 50% full. Then went to another place after that, which was actually pretty full. So when you're reading all this stuff out here that says, oh, the country's already opened up, 50%, some places are completely opened up, I'm not buying it. I mean, there's still places that are completely closed. Get on the freeway and look out the window and see how many places are open. There's just not a whole lot that's really opened back up, maybe 25% of the country. But I still see people at home. I mean, it seems like all people are doing is sitting at home, walking around the neighborhood with these, what I like to call rolling happy hours with the baby strollers and the dogs, and going to HEB. Like, I still think that's the only thing that's really going on. So
and studying for state licenses.
yeah, that's what we're doing. We're sitting around studying for state licensing exams right now. So there's really not a whole lot going on out there. I'm just not buying it. I also don't buy the vaccine, but that's a whole nother discussion. Wall Street, this is really interesting. Money printing machine is on full blast. There's something right now called Robinhood investing. That is retail investors, mom and pops, people like you and I, that are going in and buying everything on the stock market. That's really what's keeping the stock market up. It's kind of crazy when you think about it, because I think ultimately it's not going to end well for them. I don't want to get into the specific numbers, but we're seeing a lot of buying activity from very unsophisticated investors, which is fine. They can do whatever they want with their money. But this nonsense here, I'm not. It's going to be bad when the market does correct, because it's still pretty bad. This is really interesting. There will be consequences. Did the Fed overreact to a natural disaster? I've really been waiting for an article that follows all this, and I'm glad these guys have. And evidently I missed it in their first article. But these were all the packages. March 6th, $8.3 billion spending package. 6 days later, Federal Reserve supplies $1.5 trillion in liquidity. This is when they started talking about student loan stuff on the 13th. National emergency is declared on the 13th as well. Federal Reserve cuts rates to 0 and launches $700 billion in QE. That's 9 days, by the way. 8.3, 1.5, and then it's $700 billion, so 0.7 trillion. They launched the primary dealer credit. They launch a money market facility. Another relief, the relief bill actually gets signed. Defense Act, limited QE. I mean, you just start going through here. Here's another 350 billion, 600 billion, 500 billion, 850 billion. This is what the new Fed balance sheet's projected to look like, which is just absolutely insane. In fact, I would argue you could superimpose the S&P 500 and nominal real estate prices, and it will almost mirror this exactly, with one exception. There's no plateau here. Literally started like this, 08 dip, and then just skyrockets up. So they're not planning on slowing down anytime soon. My guess this is out to 2023, if I remember from all the different programs. So your Federal Reserve is printing money like it's going out of style. Now, where Dr. Dotzauer and I disagree is he doesn't see inflation anywhere. And I'm like, yeah, well, I see inflation. I see inflation a couple of places. Go buy a car. Tell me what that car costs. We just bought a used 4Runner last week for 35 grand. So I'm like, you tell me where you haven't seen inflation in the last 5, at least not 10 years. So look at real estate prices. Now, there's no inflation in energy prices right now, but that will change. So we are seeing some inflation in some certain markets. Oil is up. The Chinese are going into oil hard over the weekend. And what they're doing is they are calling all of these tankers that have been floating around the world and saying, hey, you know what? If you got no place to drop your crude off, bring it to China. I think this is really smart on their behalf.
Oh my God, they could build their reserve probably in less than 10 days, right? What is it? It's concrete and a wall, right?
It's not anything fancy. And they don't have to deal with all the environmental regulations.
Smart. Jeez.
It's incredibly smart. And these VLCCs carry about 2 million barrels of oil. So I think this is oil demand right here, or this is a number of vessels headed to China. It's at an all-time high in the last 4 years. I think it's incredibly smart. My guess is they're gonna build these things, these containers, as fast as possible, and hedge their energy costs. If you guys remember, one of the most famous case studies from the Harvard Business Review over the last, let's say, 3 decades is Southwest Airlines, when they went into the futures market and bought all that avgas at pennies on the dollar, and that really launched Southwest Airlines into a major player because their fuel was so much less expensive than everybody else. These guys are doing the same thing, And I think it's incredibly smart. Just take all the world's oil and park it. So this is the news of the day right now. There's a quote tidal wave of delinquent mortgages set to surpass the Great Depression. Let me read some of this, and I want to tell you where I'm having a hard time with the data. With nearly 4 million homeowners in some type of mortgage forbearance plan, representing almost 8% of all mortgages, delinquencies are set to eclipse the Great Recession, which peaked at 10%. Let's keep something in mind. Forbearances are not delinquencies. And let me explain to you what the difference is here. Delinquency is when you actually miss a payment. They're just trying to renegotiate. Maybe the terms, maybe they'll just add it to the back end of the loan. Well, that's actually what they've said here in the last couple of weeks. According to a new report from the UK-based forecasting firm Oxford Economics, 15% of homeowners will fall behind on their monthly mortgage payment in a tidal wave of delinquencies. Stimulus legislation signed by President Trump allows any borrower with a federally backed mortgage to request forbearance for up to 12 months, meaning the homeowner can skip or make reduced payments during that time. So I want to make sure everybody understands this.
Are they counting that as delinquencies?
No, well, they're counting that as forbearances, and then they're saying, well, all the forbearances are going to go into delinquencies.
Oh, gotcha. Yeah,
So,
probably.
Yeah, so here's the chicken without a head running around Facebook right now, is that all of the forbearances will turn into delinquencies, and all the delinquencies will turn into foreclosures.
Yeah,
and I'm like, it's not going to happen. It's not going to happen. Everybody's this is what I love. Everyone predicts a bloodbath, and then it never happens. Like I keep telling folks, I'm like, real estate's not going anywhere. It's only going to get more expensive. Oxford Economics forecasts is half of the potential mortgage bloodbath predicted by Moody's. So they're saying it'd be even higher at 30% Americans defaulting on home loans. I'm not buying any of this. I don't buy the unemployment data either. Like, here's the problem with real estate investors. I find real estate investors to be really, in some cases, very smart, and in other cases, really stupid. And let me explain this.
Naive.
No, it's the best way to explain this is, if you truly believe 30% of Americans with home loans, 15 million households, are going to go into foreclosure, the world will literally end. Like, there's not going to be let me take my foreclosure class, we're going to get rich, we're going to buy 1,000 houses this year. There's going to be no money. Like, real estate is a significant portion of GDP. Mortgages are an incredible, huge piece of GDP. So if we have something like what happened in 2008, the world will literally end if it's twice as bad for 18 months. There's not going to be, I'm going to raise all this money to buy real estate, I'm going to be buying houses for $1. No, you will be trying your hardest to figure out where your next meal is going to come from. Like, there is no way this is going to happen. No way in hell is it going to happen. The banks are going to step in, mortgages are going to get bought, homeowners will get directly bailed out. In fact, there's a rumor out there the Fed is going to start directly lending and creating its own mortgages. Like, this will not happen. I can tell you that unequivocally. It absolutely will not happen. In fact, there's a story, and I posted it earlier this week. There's now a deal between, I want to say it's BlackRock. No, it's Chase and American Homes for Rent. Let me see if I can pull it up. They are building houses now.
Yeah, right.
So if you think, here we go. If you think all these banks, like JP Morgan, they hold a lot of that paper. You think they're going to let all these people go into foreclosures and real estate drop to 25 cents on the dollar? You are completely delusional. There is no way that's going to happen. No way. These guys just greenlit a deal between the two of them to build 3,000 single-family homes. And you think they're going to allow the market to go into a mass foreclosure? Not going to happen. Not going to happen. So if you're a real estate investor that's sitting on your hands waiting for the next financial crisis, it ain't happening this year. It's not going to happen next year. Not going to happen the next 5 years. There's no way. Let's go back to this. Let's go back to this over here. The Fed ain't going to let it happen. They're just not. They're talking right now about bailing out cities and states. If you look at that, if you look at the bill that got out of committee, this past weekend?
Friday was Pelosi's bill. Yeah.
Yeah, Pelosi's bill. They're talking about bailing out cities and states.
$1 trillion.
Yeah, another trill. And then they're talking about at the international level forgiving debt for third world countries. You think they're going to allow in a election year ma and pa homeowner to go into default? BS. This is total BS. It's not going to happen. In fact, let me explain this. Were you allowed to go into forbearance in 2008? The answer is no.
No, not until 11, 12, or 13.
And even then, there was HAMP, HARP, and a couple of other things, and they were small compared to the foreclosures. This law essentially allows you to stave off your delinquency by 12 months. So I want everybody to understand this. This means you can have a forbearance for 12 months. You aren't even delinquent till month 13, assuming they don't extend the forbearance for another 6, 8, 12, 24 months. Like everybody's running around Facebook right now, and maybe they just can't read. Maybe that's the problem. They're like, oh yeah, man, we're going to crush it. We're going to buy all these foreclosures. When? 5 years from now? Maybe. I mean, they could just grant a forbearance for the next 5 years and then just have the Fed pay the mortgages or have the Fed buy the mortgages. And nothing happens. Real estate prices keep going up. Well, Jason, when are they going to stop going up? I don't think not at the affordable house market. You got to think 12 months of forbearance, half of those properties are below, 260 grand? What's the median home price nationally? Let's pull that up.
Right, 264.
Yeah,
it's
$264,000. So let's just assume for a second that half of these are below $264,000. They could just grant a forbearance for those forever if they wanted to. And then this is what I find funny. Given the risk mortgage companies are facing right now, many lenders have imposed more stringent requirements. I got a text message Friday from a buddy of mine, and he said everything above 620 credit score is business as usual. And he said below 620, there's some really goofy overlays. But he said aside from that, above 620, it's like it was before COVID. Guys, if you think the world's going to end and there's going to be all these foreclosures, I need whatever you're smoking, because that's not what I'm reading. This is not even market data. This is just what Congress and the president are willing to do. So if you're sitting on your thumbs waiting for the next crash, it's not coming, not to the affordable house market if you're a landlord. Now, I'm speaking specifically to people that invest like we do. If you're buying houses to cash flow them in Airbnb or single family rentals, your time is up. You've got 24 months maybe, and this game is over.
Yep.
Those houses are going to continue to appreciate rapidly, especially down here in Texas. Heck, what'd you guys see this weekend? I will tell you this right now. Let's take a look here. Giga Texas, it's coming. And I'm telling you right now, this guy right here ain't the only rich guy thinking about coming to Texas. Now, I can't tell you what's going to happen in Michigan and Indiana and Minnesota. Where are all the places these investors are investing in? Ohio.
I can tell you what's going to happen in Ohio. Indiana. I got a really good idea. You're fucked.
Yeah. We told you not to invest in those markets for 3 years, and a lot of you guys did. You're about to get just hammered because rich guys like this are like, I'm not really a fan of California anymore. I'm not really a fan of Michigan anymore, or Ohio, or wherever I'm at. And it's not just because California is expensive, but they're looking around these blue states going, well, wait a second. We've been closed down for like 16, 18, it's like feels like 6 months now. 2 weeks, I think, is reasonable. Beyond that seems completely excessive. And these guys are thinking the same thing. They're like, this is ridiculous. These rich guys are just going to up and move. Now, here's the other thing that's going to happen. You've got international businesses, including businesses located in China, that are looking around going, this was crazy. We want to move our manufacturing to the United States. That is absolutely going to happen. And where are all those companies? Not all of them, obviously, but where are most of them going to end up? In Texas. So people running around on the internet right now, and I'm watching all the pundits, I'm watching all the quote experts, and they're expecting real estate to crash. They're in for a rude awakening. There is no crash coming. This says that, read this right here. I'll make sure everybody read the English. Stimulus legislation signed by Trump allows the borrower to request a forbearance up to 12 months. They're not even going to be in default until this time next year. And even then, if they're in default, how long is it going to take for them to foreclose? 3 years? All the while, what's happening down here in Texas? This guy and all his buddies are moving to town. So maybe somebody can't find a job. They're what are called structurally unemployed, meaning their job skill set is no longer commensurate with what the market demands. I don't see that being a problem in Texas because guys like Elon are going to move here and they're going to set up shop. He's got, Rob, if I'm not mistaken, his Tesla operation in California is what, 10,000 employees?
Yeah, 10,000 employees, and they estimate between 50 and 60 general jobs in that area because of the supply chain.
So to give you guys an idea of how big that is, that's like 25% of the population of Corpus Christi. And that doesn't include, he's got to build a gigafactory. He's got to build the truck manufacturing facility, which I guarantee you that truck facility with the semi and the Cybertruck is probably going to be as large, if not bigger, than the operation he's got in SoCal. We're looking at 120,000 jobs from one company overnight.
Yeah, they're talking about building the first Terafactory here. Meaning he'll have 2 lines of production, not just a single car line, but he'll have the truck and he'll do the Y here, which is being done in China. He'll do the Y here and the Cybertruck, and then build out the semi. And what's even more interesting is this battery thing that we're waiting on. It sounds like he has a dry cell battery now that will increase the range. They're talking about a base Model 3 now having about 450 miles per charge, and the extended version going up to 700 miles per charge.
Jeez.
And the truck being between 500 and 600.
I will tell you guys right now, with the new battery technology, if they can, and I don't know what it takes to charge, all those batteries are all different sizes, but if we're talking about a relatively, what's a supercharger level 3? How fast is a level 3 charge? Is it
20 to 40 minutes for a Model 3, but they're talking about going to Supercharger 4, which will be below 20 minutes. So it'll be like a 15-minute charge.
Okay, I don't think Rob and I can get out of Buc-ee's in 20 minutes.
You can't even get out of Buc-ee's in 15 minutes. You'll be done. Yep.
So you're going to plug your Tesla in. By the way, that now gets 600 miles to the charge. And by the time you get your brisket sandwich and a Gatorade, your car is going to be completely charged.
Buc-ee's balls, beaver nuggets.
Yeah, the beaver nuggets and all that other stuff. And all of that, I can almost guarantee, if not all of it ends up here, he's got to expand the SpaceX facility. The trucks have to be built here. There's no other place he can.
Well, I told you there's the steel plant in Corpus that's going up, and I think that is a major supplier for Tesla and SpaceX. You know, the trucks are stainless steel. The bigger thing on that battery and I read all about on it this weekend. We're talking about 1.5 million miles on the battery.
Crazy.
Yeah, so all of a sudden now this Tesla has got a 10-year life,
Yeah.
right? And maybe more. And then when the battery degrades, it only degrades down to like 80 something percent. And then they take that battery and they drop it into the grid along the electrical grid to store during the peak times when they're to draw from during peak times and store during the cheap times.
Yeah.
So
Yeah,
I think Tesla's coming. I think it's coming in a big way. I wouldn't not be surprised if Battery Day, which is supposed to be next week, coming up in the next 10 days, they make the announcement for Austin. It looks like it's Austin. It looks like there were 3 locations they narrowed it down to outside of Austin. So, and they actually bought into a chip company in Austin recently. So I think you're going to see the first Terafactory here in Texas, which will be very, very exciting, where they're making the batteries, they're making the chargers, they're making the semis, they're making the trucks, and they're making the Model Y, all here in Texas, as well as SpaceX expansion here in Texas. I mean, the Hawthorne facility for SpaceX is just weird. That should be relocated at some point too. But he did do a round. He was pretty smart. He did a $2 billion raise for Tesla, like just as China was seeing the coronavirus happening, but before it hit America, he went out and did a $2 billion raise. So they have enough cash to do whatever they need to do, and they think that they're going to basically get a factory up here and running in Texas in less than 1 year. From when they put the shovel in the ground to 1 year later, they're going to have cars rolling off the line in Austin.
I will tell you one reason why I think it's absolutely going to happen in Texas. Because if there's one thing we love in Texas, it's putting the middle finger to the state of California. Just absolutely, it's just one of the things just they absolutely love. So I have no doubt there are a lot of phone calls going to Elon from maybe not necessarily the governor. I'm not so impressed with the governor, but I could certainly see mayors of cities getting on that phone. Hey, man, love to have you in our backyard.
Oh, yeah, for sure. But I think it's Austin. I think you'll move your workforce so easily to Austin, right?
Oh, yeah.
It's just like, just like California. It's a little hotter, but move to the lake country. It's really nice up there. And you immediately get a 10% raise because you're not paying state taxes.
Yep.
And what you can buy, the $700,000 house that you could buy, basically the piece of crap up in Silicon Valley now, $700,000 actually gets you a pretty nice house in Austin. So, yeah.
I'll also add, I think this bodes really well for the deals we're doing in Corpus because the Port of Houston's already too packed. And my guess is he's going to be getting raw materials in, if he's not already, for SpaceX. Once Starship really kicks off, they're going to be bringing all that stuff into the Port of Corpus. And then they'll be doing if they're shipping trucks outside the United States, my guess is they'll do that by ship. And the Model Y, like you said, the Model Y is being built in China right now, but he's only got 7,000 employees in China. And as that thing takes off, I could totally see them expanding the facility down here in Texas and then shipping that stuff to Europe. So we'll see how all that rolls out.
Hey, one interesting thing I saw on him, the last little thing I'll throw on that, is the ARK Investments. That's the one that's really bullish. They're saying, Tesla is going to go to 15,000 a share if they hit all 5 critical expectations. But even if not, it's going to be at 3,000. They basically said this. They said, and one of the critical features of Tesla is this: can they maintain somewhere between 8 and 11% of the EV market as they move forward? Or will these other manufacturers basically take that share away? In South Korea, he owns 56% of the market.
Mm.
He's crushing it. The market share has gone up. It's gone up over the last 18 months, not down. And but no one's delivering. I mean, GM took the opportunity to push all their products back, canceled the Volt. So GM has no electric vehicle coming to the marketplace for the next 3 years, including the Hummer. The Hummer got pushed. So I think it'll be great for Texas. I think there'll be a lot of jobs. I'd love to see a Terra factory. Also, all good stuff.
Well, that, another thing to keep in mind is that, and we were chatting about it this weekend, how sophisticated his design philosophy is. Eliminate the part. Let's not improve the part. Can we eliminate the part? And your traditional auto manufacturers, where they make their most money, is in parts and service. So his model is not even a auto manufacturer model. So if you take a look at a maintenance schedule, even on a Toyota, and compare that to a maintenance schedule on a Tesla, and then you back into what's it cost for gas and maintenance and all that. I mean, with a Tesla, all you're doing is replacing and rotating tires. I mean, that's really all it is. And they're going to continue to get better and better, especially as they make more and more of these things. So, like I said, the point here is, and Rob and I can sit here and talk about Elon all day, but the point is that he ain't the only rich guy coming to Texas. Like they are, I can tell you, these guys are fed up with this nonsense. Why some of these companies were not considered essential, why industrial production was not considered essential, is beyond me. So I imagine they are flaming mad. So, all right, Charles says, saying a huge crisis can't happen because the government will bail everyone out doesn't seem like a great outcome either. I have faith in capitalism, not government support. The economy is in trouble if capitalism can't operate and consumers don't want to spend. Charles, I'll tell you right now, we do not have a capitalist system. We haven't had one for decades. And if you don't believe me, look what happened to the mortgage market when all the non-QM lenders walked out. Non-QM, you could say another word, private mortgage. There's no private mortgage market, just in real estate. There's all these guys, everybody's sucking from the government teat. I really don't believe the United States has not been a, quote, capitalist nation for decades. If you want to go to a real capitalistic driven society, although it's somewhat totalitarian, is Singapore. That's about the last place on earth where you could see real capitalism running rampant. But calling the United States a capitalist nation, I think that ship sailed decades ago. And now they're just at the point where they're willing to print as many dollars as they can. But here's the reality. So which side of the coin do you pick? Do you invest now because of inflation and because there's really not going to be a downturn, or do you wait for the downturn? So then I always ask guys, they're like, oh, Jason, there's a real estate crash coming. I'm like, okay, explain to me how that's going to happen. Somebody explain to me how that's going to work.
So So here's our central point, so everyone understands it. First, let's talk about the asset class. We're talking about single families under $180,000. We're talking about multifamily in Houston under $100,000 a door, and we're talking about apartments roughly $80,000 or $50,000 a door. That's our market. We're not talking about Class A high-rise towers. We're not talking about $500,000 homes up in Cypress, McMansions. We're not talking about $1 million homes in River Oaks. We're talking about rentals for working class people. And that's when we say there's not going to be a market crash, that's what we're talking about. We don't listen, will there be foreclosures in that 300 to 500? Yeah, there is, absolutely, because the engineers are going to lose their job, reshuffle, and there's going to be tightening of the belts and all that other stuff. I get it. United's going to lay off a shit ton of people, right? I totally get it. So yeah, if you're looking at the Woodlands and thinking 350, 370, 500, 700, yeah, I think there's going to be some issues there. The market that we're in, we don't see it. And here's the reason why. There's simply not enough houses in our market. There's not enough houses in the entire Houston marketplace. A good, balanced market has 6 months of listings. We're at 3.8.
In the middle of coronavirus.
In the middle of coronavirus with no showings and all the craziness and everyone getting laid off, we're still at 3.8, which means we're still in a seller's market. Therefore, if the seller is in control, what typically happens? The price goes up. That's our thought process.
I will go back to what Dr. Dotzauer said. He's the former head of the Texas A&M Real Estate Center. And he has said this. He said, we have 40 years of data to explain this. When months of inventory in Texas exceed 10, that's when we see price reductions. That's when we see the median home price and the average home price fall. We're at 3.6. Inventory would have to triple in order for us to have a crash.
Right. So what's wrong with that chart is sales went down, but the price stayed the same, and the median price went up. Right, which tells you we need to look at more factors. Sales went down, so you think, oh, there's not enough people buying, and your normal assumption would be then prices must have gone down. They didn't. They either stayed the same at the average price or went up on the median price. Meaning there's not enough product out there still. This is still a seller's market, even though there was a gross reduction in the amount of sales.
You know what I think is hilarious here, Rob? This is pending sales are down 18%, but showings were down 60% on a 3-day moving average. Like, this thing should be in the basement. It should be like 40%. So I'm not buying the crash. I'm not buying the crash. It ain't happening.
Then the last thing is the one point you made, the unemployment numbers.
Mm-hmm.
Only with one of the first bills that passed were 1099s now able to declare unemployment.
Correct.
So we think there was a bump in the unemployment number because a lot of contractors just became unemployed, where usually they could not apply for unemployment, now that they could. So that's a difference. It's kind of not an apples to apples thing when we look at unemployment back in 2012 and 13.
Well, and I'm wondering, and what's interesting, as soon as oil dipped below, like, once it dipped below, I guess 40, 35, whatever the number was.
Yeah, 40.
I heard through the grapevine, all the 1099s got fired. I mean, it's like, it was immediate because I wish they had a chart for 1099s. I would love to show it where it says 0 and then it shows. I don't think anybody's tracking it because it's not a sexy story, right? It goes against the panic narrative that everyone's been playing.
Right, and then they allowed more underemployment. If you're underemployed, I mean, and then here's the big thing again. There's 30 million people that are unemployed, right? Or whatever the number is now.
Yeah.
20 something million. Right now, the average hourly rate for unemployment is $27 an hour. Because remember, there's that $600 bonus.
Yeah.
And the bill that Pelosi just passed extends that bonus out. So if there was on the low end of the earners, right? And we're talking, 27 is significant. 2080. That's a $56,000 a year job. That is almost the national average for income.
Yep.
So when I think of unemployment, I think of like food stamps and struggling, and that's not the case this time around. Not that it's good. In fact, it's really fucked up, but it's going to be a little bit different than what it was in 2010, 11, and 13. Right? And if Pelosi gets her way, this thing's going to be extended out to the end of the year. So, you're going to be on average making $56,000. I don't think there is a lot of people refusing to go back to work because they're making more money on unemployment. Other people doing it, I don't think it's a tidal wave of those people. But just based on your own economic interest, that extra $600 a week for someone that stays at my apartments is, phenomenal.
Yeah, it's almost 2/3 a month of rent, right? I think our lowest high 8s, low 900 a month. I mean, you get your rent paid.
Yeah, we still don't like Beaumont. Someone asked if we like Beaumont.
Yeah, I just Beaumont. I mean, I got a choice between Beaumont and Corpus right now. We're down in. It's not a bad market. It's just that's our preference right now. Let me see. There was probably some stuff in the chat. Let me see. I pull that up.
No, I think we're good.
Good there. Hold on. I see 4 chat messages. That's my issue with seeing how real estate can only get more expensive. Interest rates, historic lows, and unemployment shows many without jobs. How is it projected for real estate to inflate more? Who will be buying it? Let's take the emotional language out. When I hear people say inflation, like it's prices going up because there's no inventory. Let me pull this up. I'll go back to the Houston real estate prices at the Fed. Let me show you guys this again. I know I understand. I don't mean to be like. I don't mean to be purposely obtuse because I know you guys get bombarded with all kinds of crazy stuff all day long. Let me share this with you guys and I'll show you exactly. Here's the data. That's it. So this is part of this crash. Let me do this. Everyone must read this book. You must absolutely read this book. This is Aaron Clary's book, Behind the Crash, Confessions from an Insider. And here's what I took away from this book. So much stuff has to happen in order for there to be a crash. Like, there needs to be a bunch of houses. There needs to be free money for people. There needs to be free money for developers. There needs to be cheap land. There needs to be cheap construction. There is none of that. There hasn't been any of that in 10 years. Ask Rob. Our labor prices are ridiculous compared to 10 years ago. Material costs have gone up substantially. Land has gotten more and more expensive. And there's no money out there for developers. Trust me, there is nothing out there. That's why we're having to put the syndication together for this for these quads, because the money for developers is almost zero. That's what this was. I mean, look at this. This was a recession. That's a recession. That's a recession. That's a recession. This was the oil crisis that crushed Houston. But our economy is not really based on oil anymore. And keep in mind, the median home price now is way up here. I mean, I don't see the crash. I mean, if you guys want to wait, that's fine. But I'm like, I just don't see the crash. I just don't. I'm just there. There's no data. No one has shown me any data that could say this is when the crash is going to happen. Everybody can run around and say there's a crash, there's a crash, there's a crash, there's a crash, and in 10 years you might be right. But no one can sit down and say, well, here's the data, and this is when we think it's going to hit its stride. This is what areas of the country we think are going to have the highest impact. Now, I will tell you this, Rob and I have done that analysis. That's why we're in Vegas. That's why we want to be in Miami. That's why we want to be in Tahoe, because we know we're going to be able to pick up condos for 50 cents on the dollar. That's why we started Vacation Club. And Rob he's still angry about missing out on all those deals in Vegas. So we're just not going to let that happen again. It's one of the reasons the 45 Club will be able to work internationally now instead of just in Houston. We'll talk more about that in the coming weeks. But the reality is I don't see it in the market in which Rob and I operate and our investors. I don't see a crash. And trust me, I would love nothing more than to go into Bear Creek and buy everything for $100,000 a door. But guess what? It's not going to happen. It's just not. Let's see. Government will sell all the mortgages to Mnuchin like he got Indy Mac for a song. Yeah, you bet. You are absolutely right. Most recent reports states Musk has set his sight on Austin's or near Austin. I think so. Lisa, it makes sense for Austin to get the headquarters for Tesla, because all those engineering nerds, they're not going to be big fans of South Texas.
Yeah, they're not going to Lake Jackson.
No, they're not. Yeah, they're not. They're not going down to Boca Chica. There's not
Yeah.
a plethora of $5 coffee establishments down in Boca Chica. And flying out of Boca Chica is a total pain. So
Need the private
I
jet.
told them to see them setting up their headquarters in Austin and then setting up the actual manufacturing down in the valley. That would be my guess, or near Corpus. So especially with the port expansion in Corpus. Yep, David, I agree with that. What will happen to the hotel, motel, property foreclosure, and business? That is really interesting. You know, the hotel industry, you know, Jillian made a really good point 2 weeks ago when she said, what's the hotel business going to look like when nobody wants to really stay at a hotel if they could stay at a house that's an Airbnb? And I think that's a really good question. Now, that's something unique, not only to Texas, but to Houston. You guys have to remember that they're now collecting hotel tax for Airbnbs in Houston. That's a good thing. That makes Houston now the largest Airbnb market in hell, probably the world. Definitely in the country. Because now we can turn our single family houses into Airbnbs. And as long as the HOA doesn't restrict it, then we can host Airbnb there. So I don't know. I'm more interested to see the Airbnb impact with regards to coronavirus and instead of what's going to happen to hotels. But I don't know. Rob and I obviously enjoy the hospitality business. We got real close to buying our first hotel. We may revisit that, I guess, if insurance rates come more in line, that makes sense. But we're looking for boutique hotels now that we can run on Airbnb. We're not looking for a 300 key, you know, national flag. We're really looking for the boutique stuff.
That's an excellent segue. Tonight is the Airbnb Q&A with me and George. So make sure you get on tonight, guys.
Oh, Airbnb Q&A. That'll be fun.
9 p.m. Central.
Your view on how real estate pans out in the near future is absolutely refreshing since it's projected our market specifically. I get the view on real estate getting expensive now. Thank you for the kind comments. So
yeah, it's going to get cheap in Miami for second homes, and it's going to get cheap in Vegas for, you know, Airbnb high-rise apartments. We're going to pick them all up. That's what we're doing. We're happy to.
Let me pull this up. You make a good point here, Rob. Let's do this. Let me see if I can pull up the Las Vegas data. They actually do Case-Shiller. They don't do Case-Shiller in Houston. They do Case-Shiller. Case-Shiller is a 20. Oh, geez. Look at that. That's what a real estate crash looks like.
I was right there, 2011, right? I mean, I was right there, dude.
That is a freaking crash.
Oh, yeah. I was in Vegas 2010, 2011, 2012. Jeez, that's where I was.
That is what a freaking crash looks like. Look at that damn thing. It started, what were they at? They were at 120 bases here, 120 on the index in 2004. And then 4.5 years later, they were 106 from a peak of 223. So
234.
234. So it dropped in half, more than half, like 60%.
I'm telling you, dude, that's what you call blood on the streets.
That is blood on the streets. That's what a crash looks like. Crash does not look, the stuff we experienced in Houston, 07, 08, we just couldn't get loans. That was really
a 55% price reduction.
Yeah, that is, and that's at the median, Rob.
Right. Yeah, I was there. That was not a fun place to be.
That is bananas. I've actually never pulled that up before. Let's pull up Miami. Oh, they do Case-Shiller on Miami. Great. Bam! That looks familiar, doesn't it?
Yeah, I was out there too.
Looks just like Vegas. That is, and look at this. I mean, look at that. It took them, well, they haven't even recovered.
Nope.
They still haven't recovered to 2006, 2007 levels. And it's gonna crash again.
Yes, that's what I'm saying. We got to be getting ready to buy these condos, dude.
Yeah, it's that's what a turbulent real estate market looks like. Let's look.
Yeah, I don't think you're gonna get what you want here.
It's not going to be too wild. Oop. Here we go. San Diego shouldn't be too wild. LA will be bananas. Oh, there it is. That's what a real estate crash looks like. The stuff we have in Houston is not really a crash. That's what a crash looks like. And they just now got back to pre-2007 prices.
Yeah, guys, listen. Don't confuse gurus' sales pitches with economic data. Everyone is going to come through town selling you a foreclosure class if it hasn't happened already. So don't get sucked into that world. I mean, there's real data, there's raw data. Look at it, think about it, know what market that you're actually in. If you're in that $500,000 to $750,000 range, yeah, you're for a hell of a ride the next 24 months, for sure. But if you're where we're at, we're not worried about foreclosures. We're not worried about any of that stuff.
There's Dallas.
Yeah, look at that crash.
Oh, huge crash, Rob. Huge crash.
Waiting for another crash in Dallas.
Yeah,
What was the last one? 1970? I mean, what are we talking about?
You know what? I'll tell you one that'll blow your mind. I don't think they have real estate crashes here. But it's a really boring market.
Yeah, that's Memphis. That's the Midwest. It's all that nonsense.
That's the second tier. San Antonio is really a second tier market.
Yeah.
And Corpus, I wonder if they even track Corpus Christi.
No, I think they consider it tertiary.
I don't think it's big enough. But yeah, I mean, look at that. That is San Antonio is a great real estate market, but it is god awful boring. It's like 4% a year appreciation. When Houston no longer becomes affordable, Rob and I will be buying houses in San Antonio.
Yep.
So that market will start to expand rapidly. And if you guys, any of y'all have been to San Antonio the last couple of years or visited San Antonio, or maybe you've lived there, I lived there through high school, and it is just now starting to really take off.
Yeah.
Yeah, when people talk about real estate crashes, when I showed you Vegas, when I showed you Miami, that's what a real estate crash looks like. These little blips in prices, this is not a crash.
Yeah.
That's not even a correction. I mean, it's just natural pricing. So, plus we buy stuff at a discount anyway. Like most of the time we're buying stuff with 10, 20, 30% equity. So if there's a market correction and you lose 5% of your equity, who cares?
Right. Now, if you do want to join the vacation, what do we call it? The travel club or the vacation?
Travel club.
Travel club. Reach out to us, 281-401-9008. Essentially what we're doing is we're just going to form a limited liability partnership, and we're going to go buy 3 condos, one in Lake Tahoe, one in Vegas, and one in somewhere between Fort Lauderdale and Miami. Pay the mortgages year after year. There'll be 16 of us. And at the end of 5 years, when that recovery is happening, we'll sell and our projections somewhere between 8 and 11% return. Fun. Plus, you get 5 weeks vacation there, wherever you want to go. 2 in Vegas, 2 in Tahoe, 2. You get up to 2 in Vegas, up to 2 in Tahoe, up to 2 in Miami for a total of 5 plus 1 raffled vacation holiday week, because everyone's going to want to do Super Bowl in Vegas, and everyone's going to want to do spring break Miami, and everyone's going to want to do President's Week in Tahoe if you ski. So we're gonna auction those off. But we have a flyer. We'll send it to you. 281-401-9008, Texas Travel Club, and we'll get you some information. All right, Jason, I am up against a 1 o'clock meeting. I'm already late for here. So
Okay, cool. I'm done. Thanks for listening, guys, and we'll see you at our next little get together.
take care, guys.